since the early days of your early days where? Brooklyn College, right? You've been
Oh yeah.
at the forefront of pioneering not just the Bitcoin, but the overall cryptocurrency and blockchain adoption movement through a variety of trials and tribulations. And we owe you a debt of gratitude for paving the pathway to where we're standing here today at the precipice of what we hope is the beginning of wide-scale adoption. So with that, thank you for joining us.
We're not even like the fact that we're having these hedge fund calls, and the fact that you need someone like me to come in and to give insight on where we are in the industry just means that our industry is not even close to maturity. Like, we're barely out of the womb, you know? We're not even in I used to say that we're in elementary school going into high. We're not even there yet. It's so early. The bigger we grow, the more fissures and inefficiencies I see in crypto, and it's great to make money now, but these are things that have to be solved. And until we had DeFi, really, there was no killer app for the layperson to want to get involved in the industry. But now with DeFi, I can go to the guy over there who's lending on real estate at 8% and say, hey, if you buy a stable coin, you can lend at 9 or 10. So it's like, what's a stable coin? What's a cryptocurrency? And then it gets into the whole thing. So yeah.
Right.
The tokenization of digital assets for the purposes of DeFi is a killer app for crypto. 100% agree with you, Charlie. Thanks so much for being on our call today. You know, we were just talking before you arrived about how some collateral in DeFi is custodial collateral, like a BitGo wrapped Bitcoin, right? A wrapped Bitcoin is custodial wrapped Bitcoin. But then other collateral in DeFi, like the Ren wrapped Bitcoin, is being wrapped on chain, you know, through dark nodes, and it's a different concept, but it is appealing to a different subset of users.
Yeah, it comes down to risk versus reward, right?
It absolutely does. And as the DeFi space is like starving for more collateral to come in so that they can do more, build more solutions, like we're increasingly seeing non-custodial collateral come in, which is you know, allowing the DeFi space to grow faster. But it's going to ultimately end up coming back to the same conversation that we've had theoretically over the last couple of years about permissioned versus non-permissioned transactions. And the growth of Cosmos and Polkadot and Handshake, you know, Handshake being the way that the internet is working away or moving away from the ICANN naming system and the permissioned access to the internet that's being kind of pioneered by Google. So this idea of permissioned versus non-permissioned internet is like coinciding with the growth of DeFi. And I would love to hear your insights as to where does the government finally like relent and let the technology go, or is the government's hand going to get heavier and heavier, in your opinion, as time goes on?
It's a great question. And I literally had a very similar conversation with Dan Larimer about the same thing. I just got off the phone with him, podcast with him before I came here. And he, as you guys know, founded Steam, EOS, and BitShares. And I had like the same question for him. And the answer that we both kind of came up with together is that crypto is this socioeconomic experiment. EOS is a socioeconomic experiment. They all are. Every project that we get involved in, every token that we buy, every conversation that we have, this all comes down to the theorization of, can you have a decentralized money, a non-fiat issued money? Can you have that concept? And he took it a step further and he said, it's not just about money, it's about governance. And so what this experiment is teaching us is, how do you actually have censorship resistance, but how do you have like on-chain or on the internet governance? And then at what point do we take those things that we've learned from crypto and apply them to the real world? Once those things start to being applied to the real, once these experiments and once these different opportunities and efficiencies that we've done better, like for example, lending is the perfect example. Once that is figured out on the internet and it's now being approached by or approached to folks who aren't already in crypto, Now that they are getting involved, that's when the traditional industry and the governments, that's when they start to push back and say, whoa, you're now taking away our control, our monopoly. We're taking that away. And I know I don't want to, at the end of the day, like I'm not against governments. I'm not against any of that. Like I'm not an anarchist. But at the end of the day, if you're taking someone's market share away, they're not going to let you do that easily. So kind of to wrap it up, go back to your question, you're going to see a huge amount of encroachment. Did I pronounce it right?
Encroachment.
You're going to see more small amounts, and it's going to be like the Dodd-Frank Act of crypto. You're going to see things like that. It's going to be these like compliance. The travel rule is a perfect example. It's going to be compliance when it comes to issuing security tokens. So it's going to be like, we're not going to say no, but we're going to make it very difficult where only companies like INX can afford to do anything. And unfortunately, I don't want to see a large wealth gap be created in crypto as we see in the regular world. The beauty of things like half of these projects is that they're proof of brain, right? They allow people to use their value that in their brains to create real world value on the internet. And so, yeah, I don't know if that answered your question though.
What? Well, I think it does, and it's interesting. So, like the travel rule is a great example of like the slow encroachment of government into regulating the way that cryptocurrencies move around. The lines between a value transaction, like moving money, and moving data, are really hard to like create a sharp distinction between the two. I mean, we trade coins like Iota here. That's like a data carrier. We trade them in million Iota lots, but we trade them for value. We don't really care about the data capacity, you know. So that's one example of like where it's a data structure, but we're trading it, you know, its value. And Ethereum, it can be looked at it the same way. Ethereum is designed to hold data, but it also can transact the value of the transaction at the same time in its own native currency. And so how does the government allow for Ethereum transactions to be permissionless when it can care about value of data?
So up until now, it's always been the toll booths. You know, they'll regulate the way in and out of this ecosystem. And so at the time of speaking, once you're in crypto, once you're in it, it's like you're in. And you don't really have to, like, you can do a lot of shit inside of it. You can do a lot of stuff inside of the ecosystem. You can lend, you can borrow, you can play around, you can create debt, you can issue your own token, you can play games, and issue NFTs, you can experiment, create your own blockchain that makes you the king of the world. And if people want to join in and join your community, so be it. You can do anything you want. The fear I have is that the internal will start to be regulated. That's my fear, is what you can do within, and I don't know how that would be physically possible, but that's where my fears lie. And I think that
if there was this in China and overseas,
sorry?
Charlie, do you think we're seeing this in overseas applications of blockchain?
But they're okay with it. It's different. I talk to my Chinese friends all the time, and they say, Charlie, like you're Westerner, you can't understand. We are born and raised with this concept of the motherland, the mother. The Communist Party is like your second mother. So if the second mother is like, and I'm stereotyping here, and forgive me, but this is what he was telling me, is that for us, we don't look at the way you Americans look at the way your government's supposed to be. We are born and raised with this communist mentality, and you have to be really, really, really smart, and you have to be really well, you know, you have to have a very good brain in your head in order for you to think out of that communist box. And most people just don't want to. They want to just live within that thing. So they're more okay. So yes, the answer is yes, you are seeing that. And you mentioned Iota. That's a project that a lot of people have said is like that China communist mentality in a blockchain, actually.
That's interesting, and I think we are seeing, you know, because of the fact that the internet itself only allows people to participate that are going through Google AML as far as like platforms. That this is the reason why companies like Cosmos have been launched, and they're trying to, and like we were talking about this right before we got on with Chad, who's talking about the fact that the ICANN naming system is like a permission system. And if you have a cryptocurrency that hasn't, or like a platform that doesn't pass Google's, you know, AML and KYC process, you can't get, you know, into the permissioned ICANN system. And like, that's problematic because that restricts the flow of information and it ultimately creates a permissioned internet. So Cosmos is an MIT project, I think, and like they're doing pretty well. Like, are they going to be, does the government have the volition to shut down projects?
No, I don't. It's not anything like that. It's not, you're not going to see the government really go after any of those projects like Cosmos and all those guys. And I love the Tendermint guys and Jay Kwan and everyone, but you'll never see something like that because that is okay experimentation. It's creating new industries. It's creating new wealth, new participants. And so far we've been able to do this in like a fair way. Crypto has been as fair as possible in terms of participating. You can either buy into it or you can work for crypto, and you see a lot of value in the industry already is created by people working for their tokens or their coins. So no, I don't think you'll see that. But at the same time, geopolitics does come into play, and there are a lot of projects that like live on WeChat, for example. And if you or us, you know, as an American, or if you're a Western European or something, and you can't access WeChat anymore, then you potentially are not a fair participant in that project anymore. So it's definitely like that. Like, for example, I actually wanted to buy, I'm talking to Alan Silber right now. I'm like texting him. I'm like, Alan, I'm trying to buy INX tokens, the INX thing that they launched yesterday. You guys, it's huge. It's the INX exchange. It's backed by like Grayscale, and it's they did a big token sale for like $120 million, the first SEC regulated IPO token sale. But I'm an American, and it's an American project, and I can't get in. And so it's just crazy how 10 years in, and we're still in this industry where not all participants are fair.
That's no doubt it affects us greatly as a U.S. registered firm, that we struggle. And this has been, I think, part of the reason for the growth of platforms like Uniswap, because it's allowing basically access to coins. So we were joking around that, like, you know, crypto exchanges and their reluctance to offer different offerings, like, allowed them to be cryptoed. They just got cryptoed by these DeFi platforms. Now, all of a sudden, you know, $120 million of volume a day is going to Uniswap. You know, that was all fee revenue that used to go to crypto exchanges, and now it's going to the people creating the liquidity pools. The exchanges got disintermediated by crypto, of all players to have that happen to. Kind of fun. But yeah, so this idea of like keeping people out of different projects, the government's definitely been doing that, and Americans are being kept out of many projects, and Europeans as well.
Yep.
What else do you see, Charlie, in the industry that you can share with us? I mean, you have great access into thought leaders. You're a thought leader yourself. Like, where do you see the opportunities for investors? Where do you see the path of regulation heading? Yeah,
there are a few like good opportunities in the space today. There's obviously like the buy and hold crypto strategy. Then there are the ability to get into a fund like yours. And in fact, I feel like I've missed out on a lot of crypto infrastructure investing myself. Like, I had opportunities to invest in every company that is $1 billion crypto company today, but because I'm not a good investor, I never did it. And now I feel like I should have, and I wish I did actually get involved in like a fund or something back then, or even now. But so where the opportunities lie are the ability to find inefficiencies. So we're talking about like wealth creation right now in a fund like yours, looking for the inefficiencies in the market, looking for the arbitrage opportunities for tokens and coins, looking for swing trades, things like that is always an opportunity. For everyone now, especially with like when you have like cheap access to capital in the US now, we have an edge over Western Europe and some of the other places that we have such cheap capital. It's a lot easier to do things in the space. Another opportunity that I see, not opportunity, but one of the biggest things that I think are gonna be the next wave of success here is when you look at like DeFi and yield farming and people kind of chasing that yield and the year of the yield or whatever, you know, you call it. I think you'll see a lot continuation of that. But what you'll see more of is you'll see blockchains want to start working together with interoperability. So you're going to see a lot of that. And I'm trying to think of an example of one. You guys mentioned it. Like you were talking earlier about wrapped Bitcoin. That's the perfect example. Like the things like wrapped Bitcoin, taking tokens, wrapping them on other blockchains, making connections, collateralizing certain coins to buy coins on different chains. You're going to see a huge amount of opportunity in the next 6 months until those inefficiencies are worked out.
You know,
And that's
Charlie,
what I'm personally.
I would got a quick question for you. In terms of bringing it down to more of Main Street, yield farming is not something I can talk to my dad about, right? And we have all this infrastructure that's technologically wonderful being created. We have like 2 different waves of adoption that we need to plan for. We have the sort of like the early adopter wave, which can talk about these things and doesn't have a problem utilizing, you know, an app on their phone.
Yeah.
But we have the wealth age, right? The boomers, and we have this wealth transfer coming. My dad's not sticking 50, 100 grand on anything on his phone, right? So what we've been trying to do is attack that bridge and bridge that gap to create a sense of investment strategy familiarity. Where do you see the gap still existing in getting everyday Main Street, upper middle class to affluent style investors, folks that haven't worked with a financial advisor? Where do you see the gap for them being bridged?
Do you realistically think that those people who are getting ready to transfer their wealth to their children or whatever are gonna trade crypto or be involved in our space, or is that money just gonna sit?
No, so like what my expectation is they're going to know that it's something they should get involved in the long term, and they're not going to know what to do.
You're right. I have that. I'm going to tell you a story. Every month I play poker with a group of war veterans. Don't ask me why, but I love sitting as a fly on the wall with gentlemen who are like over the age of 85 years old. And literally the whole conversation.
I'll tell you why. Charlie retired early. That's what's going on.
Charlie, literally what I just.
He's living
literally
in the retirement world now.
I was playing poker the other night and I lost $40, by the way, but the whole conversation was about Bitcoin. And that, what you just said, perfectly describes what he was feeling. And he didn't want to say it because of his pride. He kept asking, but I think what he was trying to say was, I know I should be investing in this, but I still don't get it, and I don't know how, and I'll never know how. And he didn't want to say that to me, but do you agree with? Because that's what you were saying, essentially.
Right, and what we've discovered is working through their existing trust official, their financial advisor, and getting the financial advisor to be able to explain to the client that they've known for years how this might go into a strategy that they've been working together for a long time, right? So this is one of the dichotomies of the crypto community goes off on a tangent that goes way over the head of the folks that really have the money to put into it.
So I want to comment on that, and it's actually brilliant because I wish he had not. So he started like throwing these words out like mining and all this stuff. And I'm like, forget that. Forget the tangents. Forget all this crap. Forget you ever understood Bitcoin or understood crypto. And you need to literally start from the beginning. And the way I try to do it is like appeal to like the person, but it's very difficult and expensive to do that, right? To get each person to understand and to love and to be part of it. So you have to go to those family offices. You have to go to their trust officials, because at the end of the day, there is going to be a little bit of like blind faith when it comes to who, how they're investing, because that's what it is. That's when you have an investment manager, you trust them to do so. They have a fiduciary relationship with you.
Right, and I think that, the more regulation that we have that's open and clear for advisors to proceed, the easier it's going to be for the client to then ask those questions and get an answer that has a solution.
As long as they segue to a commercial for us, John. Thank you so much, Dr. J.
No, but can I wrap that comment up really quick? Sorry.
Please, we have about 5 more minutes. I wanted to just use the segue to show our advisor platform. There are centers of influence with these baby boomers with all the wealth.
Oh, there you go. I was going to say, as long as the government continues to regulate those toll booths, then we're in great shape, and that will provide a lot of clarity. When I mean toll booths, I mean like tax law, money transmitter law, clarity on like-kind exchanges, clarity on what are the tax ramifications of crypto in your 401k. Until those toll booths are more clear. When those are more clear, that's when you'll see like a much more influx of like those family offices and baby boomers and things like that. But as long as they don't go in and try to regulate the internals of the crypto industry, that's my biggest fear.
Well, I agree with that fear 100% because it's all about permissioned transactions. And if we need permission to do all transactions, then
what are we doing?
It's going to grind to a halt when it comes to cryptocurrency-based internet.
Yep.
And I also too, speaking of like transactions, one of the governance style, Jacob, you had a question for Charlie?
I did. What's your opinion on like on-chain governance tokens like Comp, Curve, and especially Wi-Fi that's now at $17,000? Do you think this is like a new way for like, for example, like Coca-Cola shareholders, like when they have a vote to instead do it on like a ERC20 token, like Coca-Cola comes up with like a governance proposal on how they want to like move their company in a certain direction, and now these shareholders have these ERC20 tokens and they can vote with them. And yeah, I just want to know your opinion on
until
all that.
Coca-Cola does something like that, the opportunity to make money in governance tokens will always exist. And so do you realize like the brilliance of what you just said is that the ability to tokenize and securitize things other than equity, like securitizing revenue, to say like, I'm going to issue a token and you as a token holder, you're not getting equity, but you are guaranteed a share in like a revenue. The ability to do that is how this industry will, those are killer apps, because up until now, a company like Coca-Cola, how would they do that? There's too many like legal steps. Then there's like infrastructure steps, auditing steps, reporting steps in real time. And then there's the paying out, the airdropping. With a blockchain, it's all done for you. So it's like, that's what I mean when you're wrapping it all together. It's like you have all these realizations that these killer apps are going to come to the real world, but until they do, the opportunities to make money on it will always be there.
We saw one this week with Aspen Token. Jason brought it.
Oh, there you go. Exactly.
Jason, do you want to briefly like introduce Aspen Token and what happened this week?
So tying into that real quick,
I was excited when you told me about it.
What's that?
I was excited when you told me about that. That was so cool, and I looked into it after we talked about it.
Yeah, so it launched this week on T0. Aspen Coin is effectively, like Charlie was saying, you could securitize some cash flows. This is equity, cash flows, all the rights, bundle of rights that go along with what you would do, what would be owning a piece of real estate and all the cash flows associated with it. So it launched on Monday, and this is the first of an asset of a secure, a real. I'm sorry, this is the first of a real like asset-backed security that's being offered properly, right? And that's what T0 was really built for. So I was watching it, and actually I was on the phone with the CEO like right before this call, and the first day was maybe like a few $100,000 worth of worth of equity into it. Okay, fine. Then the second day was slower, third day a little bit. So I said to him, well, what's the deal with what's the deal with providing, like who's providing here? Like, he's like, I'm not exactly allowed to do it because of these regulations. So, they like T0 wants to have some of the market makers. I was like, oh, I thought this was like a built-in thing that you already had the market maker set up, or you were providing a certain number of tokens at this strike price with it. So it's sorting itself out. That being said, what are we talking about here? We're talking about $250 million worth of valuation that Aspen Coin represents there.
Yeah. So just for those that haven't been following, it's the St. Regis and Aspen that's taken 20% of its equity and its property value and tokenized it.
Correct. And I was literally about to pull the trigger, or like maybe like 6 months ago on it directly when coronavirus hit. And I was like, let me wait a minute and see how this kind of plays out. But it seems like they've gotten their legs underneath them for what Aspen seems to be one of the best performing markets in the country right now. So they're doing all right. And, I would, wrap this by saying, keep an eye out as to what's going on. T0 is improving what they're doing, and T0 launched, in my opinion, too early. They launched, you know, what, a year and a half ago, something?
That's not something else to be careful of, is that timing is everything in this industry. And you could have an amazing product that launches 3 months too soon. It flops.
So,
yeah, I was reminded not too long ago about the voice over internet protocol guys in the late 90s that were trying to push this through, and the market wasn't ready for it, and they went out of business. But now everything we do, of course, is VoIP. You know, they were just too early. So being early can be a death sentence for technology. You know, it's only a matter of time till we see coins like Aspen Coin come into DeFi as collateral. And this will be like DeFi collateral 3.0. And it's going to be really exciting when we can start to bring in all these security tokens as collateral. But that idea of permissioned participants comes into play because, of course, Aspen Coin is only available to accredited investors on a permissioned exchange right now.
Yeah. So I think it might be available to unaccredited investors now. I think they might have opened that up a bit. But you also got to think of Aspen Coin and really any of these other ones that are a true, you know, asset-backed security that has real value and is stable-ish, right? That could be seen as an alternative. People go, oh, do I want to go into the dollar? Well, I might not want to go into the dollar, you know, to kind of wait out this fluctuation in crypto, but I might, you know, wait it out in some real estate, in Aspen Coin or in some of the others. And, you know, obviously Aspen Coin and T0 are very invested into making this work. And if it does work and proves to be successful over whatever period of time, they've got about another $1 billion to $2 billion worth of similar type of assets, him and his investor friends, that they would go ahead and securitize in a similar manner.
Well, we'll see how this plays out. I do want to point out that we're about 2 minutes over. I know, folks, I want to be respectful of everyone's time that joined us today, particularly our guest, Charlie. So, John, I want to just turn it over to you with any final thoughts before we part ways today.
Well, thanks. Just thank you for that, Dr. J. Thank you for your comments, Jason and Charlie and Jacob and everyone who participated. You know, our industry is at an inflection point, and we need to continue to educate, you know, our peers on what's happening so that it cannot be viewed as like a scary threat to the current system, but instead like a bridge to the future. And America is not in the lead when it comes to understanding blockchain technology and the vast applications of tokenization. And, you know, all of us have a personal responsibility to share this information, and I know that everyone does. And so I thank everyone for their contributions, especially Mr. Charlie Shrem, who was a real honor to have you on our call today.
Thanks for having me.
Look forward to hearing more of your insights, you know, as the months and years go by.